Let me bring on board Mr. Nitin Panwad, who is Group CFO at Vaibhav Global Limited, joining us. Now, this is a conversation I've been looking forward to as well. And Nitin, it's because of the India-UK CETA, which has been signed. This is clearly positive for you. Talk to us about how positive. What is the current duty structure for products that you sell? And how much of your revenue comes from the UK? And what's the benefit for you? Does it translate to margin benefits?
Yeah. Thanks for having me. So definitely these kind of changes is very welcome. Much awaited news that next month it is effective. In terms of coming back to the numbers part, so predominantly we sell jewelry, but around 40% sales come through also of our lifestyle products like beauty, apparel, and accessories, those kind of products. So jewelry specifically, broadly 4% duty is in UK, and lifestyle product ranges from 6 to 16%. But right now, the procurement is lifestyle product is happening from China or other countries. But now this welcome change will definitely boost the India exporters opportunity. We have our vertical integrated supply chain where we also manufacture and export, but also we have retail presence in UK, which around 30% of our total business, 35% total business comes from UK. So that will not only benefit in terms of export realization perspective, more export from India, but also the margin benefit we will also get in UK retail operation. So both the benefit we will get. We obviously that over the time we have to see that how much margin benefit will flow in our bottom line, but definitely that this will some part of margin will come to in a P&L, and we have to see how much will pass on to the consumer the benefit to get the volume boost. But these kind of changes is very welcome, and India opportunities will increase after the free trade agreement.
Right. Nitin, I'm not sure if I caught this, but is there a rate of duty currently that's applicable on your products, both jewelry and otherwise? And what's that duty rate for the UK? What's the duty rate for the EU? If you can give viewers a perspective.
Yeah. So UK duty rates, jewelry is around 4%. Other than jewelry is hovering from 6 to 16% based on the products. Is a leather or textile is a different. But the after freight agreement that will be zero, and the compliance and the custom clearance will be much faster afterwards. So that benefit will come in the bottom line, but we have to see that how much it will be, how much will pass on to the consumer.
No, fair point. So that's still a wait and watch. How quickly do you know how much do you pass on to the consumer and how much do you retain?
Yeah. So one factor is the sourcing transferring from China to India, that after having a almost negligible duty, a lot of sourcing opportunity will transfer to India. And pricing obviously depends upon the competition, how competition pass on the pricing and how much they are retaining. But I would not quantify rather at this time. I would say that some part of the benefit will flow in the margin lines.
Point taken. And with regard to EU as well, Nitin, that could be a big opportunity. I asked you on duty rates there. Could you give us a perspective of what that could also look like? Because, I mean, that's the next big trigger point, right? UK done. Now it's probably the EU.
Yeah, certainly. So EU business is around 8 to 9% of total business. Not that size of UK and US, but it is growing fast. And the duty structure is from jewelry is pretty much similar, 4% duty. And lifestyle is also ranging from 8%, 10%, or 15%. But that will be, I believe, by the end of this calendar year, maybe it will be effective. But yeah, that benefit also will flow in the P&L.
Very interesting. Okay. And freight costs, Nitin, have they gone up? I mean, my understanding is you typically bear the freight cost, right? Because you've got, because you directly sell to the customers there. Has freight cost gone up? I'm understanding that bunker fuel prices have gone up. I mean, they might cool off given the way crude is moving. But has freight cost in general gone up?
Yeah, freight cost definitely all across the world after crude increased from $60 to $100. It has gone up, and then we have seen also surcharges now applicable for us for certain transition. But the beauty is that we sell the jewelry, which is lightweight, and then huge amount of jewelry come in a small box. So the freight proportionately is not impacted as the bigger size items. So freight has gone up definitely, but it is not as impactful in terms of portion of our sales.
Doesn't sound margin negative, Nitin, from what you're saying.
But we do pass on to the consumer because
Okay.
it would be alone impacting that. So we all pass on to the consumer.
Understood. Understood. Okay. And with regard to demand, is that holding up well within these markets? What are you seeing in terms of demand build up? Europe is obviously a big opportunity for you. You know, you've ventured there, I think, less than 2 years ago, if I'm not wrong, with that hub in Germany that you've put up. What happens there? Give us a sense, and how is demand shaping up?
Yeah. So particularly in terms of Europe, so 4 years back we started. Last year we made a break even in that operation, and now it will contribute in our profitability line. But we are not as big enough to that, which will impact. Like definitely there's some kind of impact, but also we are not. We are just 28 million euros in UK is compared to 2.5 billion US. Sorry, 28 million euro in Europe compared to 2.5 billion our TAM, what we operate in EU. So we have a lot of room. We are seeing a growth as we are expecting in Europe specifically. And maybe down the road, where if the gas prices continues to go up, then consumer might see to pull back some kind of spending that we have seen in the when Ukraine and Russia war happened. But right now, I think the recent updates are pretty good for us that US Iran is now signing a treaty, and oil prices are going down. We believe over the time it will sort out, but now it is currently the performance is our expectations.
Okay. How should FY27 pan out for you, Nitin? Give us a sense on growth. I mean, obviously, margin tailwind will come for you. 30% of your business, as you said, is UK, 11% EU, or 10% EU. If at all EU translates, then it's a bigger margin benefit. Talk to us about top line growth and margins. What's the expectation?
Yeah, this year we're expecting 9 to 11% growth. This all across. We will cross 4,000 revenue mark. Also, the margin improvement from 50 to 100 basis point we will see. We have achieved double-digit margin last year again, and then we expecting that margin line will improve.
But are you being conservative there, 9 to 11%, or do you believe that the slightly higher base, is what's keeping you cautious?
Yeah, so pretty uncertain, even after the Trump administration, pretty uncertain things happening. So we are seeing we have delivered around 9% growth last year. This year we're expecting some improvement from EU, as well as our digital share is expanding faster than TV. That will draw our line, but right now we're expecting 9 to 11% growth. That's where we are guiding to the investor community.
CapEx plans, Nitin, and how that's scaling up for you. How are you funding that? Give us some color.
Our business model is very asset light, online selling. Apart from inventory, there's no major capex is needed. Technology investment we do from mobile apps or website upgrades or some kind of AI initiatives while you're doing it. But apart from that, there's no heavy capex is needed. $3 to $5 million is our normal cycle. Now we are investing in UK to getting a new premises. We have 4 different premises in UK, consolidating to one premises, which will lead around $3 million additional investment, $3 to $4 million, which will lead around 5 to 6 million capex this year, but not significant uplift.
Okay, Nitin, thank you so much for coming in and speaking to us. A pleasure having you and getting that perspective.
Thank you.
Well, a crucial Make in India story exporting to the US, UK, as well as Europe. So key beneficiary there, Vaibhav Global. But we'll sit on a very short break, come back. Much more to talk about. Stay with us here on ETN.